Hello and a warm welcome to this week's edition of Econoday Unplugged. It's Tuesday, the 10th of November 2020. Mark Pender's stateside and I'm Jeremy Hawkins here in London. Well, as early as Monday morning, it seemed that all the talk this week would be about the US election results, which at the time of recording this podcast, President Donald Trump still refuses to accept. However, the announcement yesterday by Pfizer and BioNTech of a COVID-19 vaccine with a 90% hit rate has provided investors with a major new focal point and could put a whole new spin on market pricing. Initial reaction to the news showed just how important the coronavirus still is to financial markets. So equities, bond yields and non-safe haven commodity prices all rose sharply, while the dollar and other safe haven currencies lost ground. Of course, it's still early days, and the risk on the vaccine is that too much is taken for granted too soon. So while clearly a potentially huge breakthrough for world health and the global economy, we could be in for a choppy ride as the practicalities of actually manufacturing and delivering the drug become more apparent. Nonetheless, looking into next year and beyond, if this vaccine really is the answer, it must raise the question as to whether a global economy can handle the massive monetary and fiscal stimulus already delivered, plus what's still in the pipeline, without forcing inflation to rise to unacceptably high levels. Time will tell. And talking of time, to we non-US dwellers, it looks as if the US presidential election is finally over. Or is it? So, Mark, what's the state of play real of politics? And is there anything we can say at this stage about the implications for US policy and the economy?
Anything for certain, yes. We will know that to answer the question of is there too much stimulus, let's just say in the U.S. economy, we will know with Federal Reserve jawboning when they will start hinting at, we are now thinking about the possibility in the distant future of withdrawing stimulus, something like that. That will be the key, and it'll probably come out of some, aside or some comment in the hallway or something like that. And it may not be for a while, because right now they're on the record saying they're not even thinking about withdrawing stimulus. And in the last Fed press conference for the FOMC last week, Jerome Powell said that we're not thinking about withdrawing QE asset purchases. If they do anything for further stimulus, it was going to be on the asset purchase side, somehow fidgeting with the composition or the maturities of the securities they were buying. But that was before the vaccine announcement. So I think that really the bottom for investors. Now, as far as the election goes, the outcome, it seems would be vastly remote that Biden is not going to become president. As far as the mix in the Senate, there's this assumption all along that the Republicans are going to maintain control. I'm not so sure. They're still counting. It's still up in the air. And then the markets continued that justification, saying, well, even if it's a 50-50 split, it wouldn't be so great for the Democrats anyway. Well, maybe not. But in the blue tide theory going into the election, no one thought that the Democrats were going to get 60 seats. That's how much you need to completely block the opposing party. So, I mean, a lot of maneuvering, a lot of skating around, and a lot of trying to throw in the ideas of tax policy, regulation policy into this mix, but it's all way too early, way too subjective, I think, or you're just pulling at things. And so I think right now we have to sit tight, see what happens. And now that this vaccine has come in, that's a whole nother question. It's like exactly what you say. It's like all of a sudden now this stimulus, it looks maybe, do we really need it all? Even though there's going to be a long period of time before vaccinations are available to everyone, and we'll see with how the healthcare goes. So it's still way too early, and unfortunately, this election is still going to be a factor. Although at least we're having some kind of hopefully a window where inauguration is a day is in January 20th, I believe. So hopefully by then we'll have some kind of closure.
All right, let's put the politics on one side for the moment. Even before we got into the election, at least the results of it anyway, US employment data, what did that suggest prior to this possible new vaccine they found? Was the economy actually doing quite nicely anyway? Was it slowing down? Where do we stand?
It was, I'm not sure it was doing quite nicely. I think that is how the Federal Reserve would portray it. There was definitely a slowing. The manufacturing sector, the sentiment in the manufacturing sector is very strong right now. And you see that all in the anecdotal surveys, and you also see it in business investment, which is surprisingly strong. And in contrast to really I guess not in total consumer side housing. Let's talk about inflation. Where is inflation? It's not in consumer prices, but you know what? Hey, there's inflation in new home sales, in home prices. There's plenty of inflation. There's plenty of inflation in the NASDAQ. And these are, due to Federal Reserve policies, low interest rates, pumping liquidity, buying bonds, these kinds of things, and they're creating a sort of inflation that is narrow to those people who have enough money to invest or have enough money to buy a home. So maybe that these will begin to take off too, and these will be entering into this discussion of then pulling back this massive amount of stimulus. So, we're talking about the Democrats, they're going to win, and that means more stimulus. Maybe not. So that's why I say we have to wait.
Okay, fair enough then. What about a bit of Europe? Well, I suppose over here the come fast enough, and although a lot of people were glued to their TV sets looking at these US election results, it's still very much COVID-19 which is pretty well dominating a lot of the headlines across Europe. As we talked about previously, we've got lockdowns in place across a lot of the region now, and the numbers really aren't looking too good. Germany has just reported it has more severe patients than at any point since the outbreak began. Other hospitals in a number of European countries are also warning that their ICU beds are fast approaching full capacity. So I think generally speaking, it's safe to assume that economic forecasts for the fourth quarter for, let's say, the Eurozone, but really for the European continent as a whole, are being steadily downgraded. And it's going to be difficult, I think, for a number of countries to actually achieve any kind of positive growth whatsoever. Looking further out, I suppose one good bit of news, at least potential good bit of news, there has been some indications that e-negotiators and lawmakers are actually getting close now to reaching a deal on the bloc's long-term spending plans. And of course, this will include the Recovery and Resilience Facility stimulus package, which there's been a lot of disappointment about with recent developments in Europe about just how long this thing's taking. I think the current talk coming out of Brussels is that they may have something signed off on by the end of this week. Again,
are you talking about what was happening a few months back with the EU Leader Summit, and that was stalled, and now it's moving forward a little bit?
Yeah, I mean, it's like a lot of things. It's like with Brexit and everything else. I mean, you don't count your proverbial chickens until they hatch. But it does look as if last week there was some progress made on on just how the legal aspects of how the funding will be dispersed. And if that is the case, then it would seem that we should be able to get some kind of agreement being announced relatively soon. Now, this, as we've talked about in the past, is a significant package for Europe. And the COVID package, the rescue package itself, has been seen as a key stimulus part of the program for 2021. I mean, it should be said, it doesn't really kick in properly until the second half of the year.
What's it called? It has a number figure too, right? Was it 750 billion?
Yeah, I mean, there's a number of different figures involved in this. The overall Euro budget itself is some 1.8 trillion, but yes, 750 billion is the resilience facility stimulus package itself. That's what focus has been on. So if that does come out, and again, that would be good news. I mean, to be honest, the likes of Germany have spent more than that already, but nonetheless, it's going to be good news in terms of additional fiscal stimulus for the European economy as a whole. And I think it's going to be particularly important, really, for the ECB. I mean, if they actually come out and definitely say that this thing will be happening now, at the beginning of next year, it will take a little bit of the pressure off the European Central Bank to come out and ease policy again when we get to their final meeting of the year on December the 10th. Now, I think they've already kind of strongly intimated from the previous meeting that they'll be doing something in December, but just how far they have to sort of push the envelope may well be in part determined by what comes out of this meeting.
Well, now, what are they going to do? I was talking about the Fed last week. They narrow. I mean, they're not going to go negative rates. They've, as far as their, stimulating loan demand, they've stabilized the loan. There's not a lot of demand for loans, so there's really nowhere to go there. So they're really, QE is the only thing that they're kind of going to do. I mean, how is the European central banks?
I think
what are they going to turn to?
I think, as you say, I mean, by and large, it's got to a stage now, I think, where, almost wherever you look, interest rates are so low, taking a few more basis points off them, particularly if they're already below zero, does it actually matter that much? And I think there's been a general sort of understanding now that the so-called lower bound for European interest rates, at least as far as the ECB is concerned anyway, is this minus 0.5%. And that's where the deposit rate stands at the moment. However, there have been some comments coming out of the ECB over the last couple of weeks or so, intimating that they are looking at the possibility of further interest rate reductions. So it could mean that we see interest rates still go down yet further. I'm not convinced that we will do, but I suppose you can look across at their neighbours in Switzerland. We have their key deposit rate there standing at minus 0.75. So perhaps if Switzerland can do it, the ECB might decide it can do it itself. But as you were saying, from the Fed side, I think much more likely, if they are going to take additional action, will be through quantitative easing and probably their emergency pandemic program, which they could increase, or at least try to increase. It's, as we saw when they managed to get the last hike through, there was certainly some resistance from the more hawkish ECB Council members. And the danger is, I think, that the same hawks will be cautious about any additional increase, particularly if it looks like this vaccine is going to work and we get confirmation that the fiscal package is going to come through. But no, what you said, I think, is exactly right. They're running out of options. There's only so much more they can do.
Okay, so the ECB's main policy rate is the refi rate?
Well, it's the refi rate has been sold for a long time as their benchmark rate. That's right,
and that's at zero.
That's at zero. However, because there's been so much liquidity pumped into the system now, it's really meant that the lower limit, the lower limit to interest rates for deposit rate has become essentially the benchmark rate. It's taken over from the refi rate in terms of signalling policy, and that's one which currently stands at minus 0.5%. I think as and when we finally get away from the current environment, we get back to more more normal trading standards and practices, then you'll see the refi rate will start, will reassume its kind of, benchmark status. But at the moment, really, all the focus is on what's happening to the deposit rate.
Interesting.
What else we got from my side in terms of policy?
Bank of England.
I was going to say, I should very much meant about Bank of England, because they did do something last week, and it's a little bit more generous than markets expected as well. And again, I think that just goes back to the fact that there are very, very real concerns about just how bad an impact this coronavirus is going to have. So it didn't change interest rates. If folks remember, there was some speculation that they might decide to go negative or zero on their bank rate. That currently stands at 0.1%, but they opted to leave that alone. Although he did say that the consultation with financial market operators regarding possibly cutting rates further is still being undertaken. So we can't completely rule out the idea that we will go negative. But on the quantitative easing side, they increased quantitative easing by £150 billion sterling to £895 billion. Now that was about a 50 billion or so increase more than expected. So that can certainly be seen as being indicative that the bank is concerned about the outlook. This new program is scheduled to run, it will start at the beginning of next year, once effectively the current quantitative easing ceiling is reached. It'll begin in January next year and run through, on paper anyway, right through to December. So it implies that net purchases are going to be rather less than the £4.5 billion which we've seen over the course of the last few months. But it does mean that we're going to get additional quantitative easing steadily going into the markets right through 2021, albeit potentially on a flexible basis. So as far as the bank's concerned anyway, it looks like policy will continue to be eased throughout next year. That said, as you mentioned, this COVID vaccine, what's it going to do? Well, the only comment we've had coming out of the bank so far was from their chief economist, Andy Haldane, who yesterday simply came out and said that this is a real game changer. Can make the difference between companies surviving or going bust. So if that's reflective of the view at the bank as a whole, I suppose you've got to start thinking, well, perhaps they may have this quantitative easing program timetable for next year, but it may perhaps be shortened, chopped, or whatever, if it looks as if this vaccine is going to be delivered on time and actually does what it's supposed to do. So I think, it's going to be, I suppose the bottom line, you put all this together at the moment, there's just so many uncertainties now about what's impacting not just the UK economy, but the whole world economy in itself, is that almost the idea of trying to make forecasts about how things are going to go is now impossible. And I suppose I should mention, of course, for the UK, we can't leave the UK without talking about Brexit. Those post-Brexit trade talks, well, they resumed this week as of the back end of last week, when hopes were quite high that we would be receiving some good news soon. Well, it looks as if they still got stumbling points and some various fairly serious sticking points. So you keep an eye on that one. I think the general assumption is still that this November the 15th is kind of a deadline if they're going to get an agreement on a deal that can be ratified by all the parliaments involved. And that's one of the issues, of course. Everyone's got to ratify it within the EU side as well as the UK. It's going to be ratified by the end of this year before we start next year. And it's quite interesting on that front, actually. I mean, you can always read too much into these things, but the EU Commission, they came out with a new set of forecasts last week. And interestingly, they revised down their forecast for Eurozone growth in 2021. That now stands at expected 4.2%, down from 6.1% they put out in July. But in the small print, they said it assumes that there will be no trade deal with the UK, and trading between the UK and the EU will revert to World Trade Organization terms as of the 1st of January. So I guess to actually include that in your central case forecast must, just highlight the fact that both sides are taking the possibly very seriously.
But
we'll end up without a deal.
But you were saying that their forecasts, they upgraded their forecasts. Did I get that right?
No, they've downgraded them.
They downgrade. And do you think that was because of Brexit?
Well,
or no deal Brexit?
It may be partly to do with Brexit. I think, to be perfectly honest, it's got an awful lot more to do with the second wave of COVID. But it's just quite interesting that looking at some of the smaller texts, when you have the underlying assumptions, it shows that they decided, well, at this stage perhaps it seems more likely that it's more likely there won't be a deal than they will do. And indeed, I think when just going back to the Bank of England, because they've announced or released their latest monetary policy report alongside the policy announcement itself last Thursday, they came out and said that even with a trade deal, because this thing's taken so long now, the simple lack of preparedness for Brexit on the part of UK firms means that it would cut 1% from GDP in the first quarter anyway. So it really is the case that this thing has been dragging on for so long now. Businesses haven't known whether, look, do we assume there's going to be a trade deal? Don't we assume anything? And of course, they've tried to defer it as long as they possibly can because they're desperately hoping for a trade deal. Well, it seems now, if you believe some of the surveys that the bank's been undertaking, and there's this general consensus, well, look, if we do get a trade deal, great, but kind of it almost doesn't matter because we're going to have problems anyway because this thing's been rambling on for so long. So all in all, not great times as far as the European economy is concerned at the moment. What else should I mention? I suppose while we're on central banks, just to look ahead, later on today, we'll get the Reserve Bank of New Zealand. They'll be coming out with their policy statement, which is expected to see no change. So their official cash rate being held at 0.25% and no change in their quantitative easing as well. Although, of course, as almost with any policy at the moment, I suppose, certainly with the possibility they could do perhaps a little bit more on their quantitative easing side, just to be To be just to be on the safe side of things going forward, since there is so much uncertainty around the world at the moment. Okay, well, I think that's probably it from my side. Anything else from yours?
Yeah, I want to jump into an odd question now. Has the rival vaccine that was being developed by Moderna and Oxford, is that correct?
Yeah.
And have they said anything to the Pfizer?
I don't, well, let's just wind it back a little bit. I mean, looking at vaccines on the positive side, we can say, one, we got this Pfizer vaccine, which, all being well, is going to do the job. But that's only one of 11 vaccines which are currently in the final stages of testing. And I think the Oxford one, as I last recall, I think they were due to be making some kind of statement about their results next week. So it's quite possible. I mean, just because Pfizer have come out with what appears to be a vaccine that works, it doesn't mean to say we can't get alternative companies coming out with alternative vaccines. And if we can do that, then that's got to be really good news, because clearly the more vaccines are better in this instance if we're going to try and issue this thing globally.
And have you read about the path of yesterday's announcement? Is it a secure path to development and application, or is it?
Well, the application still has to be formally agreed by the regulatory bodies. But I think the underlying assumption, certainly within Europe anyway, is that that's just going to be a sign-off. And I think Pfizer was saying they hope to have it out the way by the end of this month. And they were hoping that some of the first deliveries would be in December.
Well, then it makes you wonder if the market didn't go up enough.
Well, yeah, it may be. I suppose it's still the case that you can say, well, if it's going to cure 90%, there's still 10% of people that perhaps it won't actually cure. There's all those sorts of things looking at this, and I think there's still the worry that yes, it's the test results are good and certainly better, I think significantly better than originally expected, but the actual sample size itself is still relatively limited. And it may be if you start wheeling it out around the globe, then all of a sudden results aren't as good as you were hoping for. But no, let us all hope, because we could do a bit of good news. But as we're saying, I mean, it really is, though. You think about it, what we've been talking about on the podcast, what the market's been talking about for so long now, basically it's got to a stage, if you knew what next week's COVID numbers are going to look like, you could call what was going to happen to the dollar, what's going to happen to bonds, et cetera, et cetera.
Well, in between, before we roll out this or the vaccine is rolled out, the COVID numbers are very high. And so there's, that's going to be, I don't know what kind of an issue that might be for the markets. It certainly wouldn't be a good issue for healthcare providers.
I think that's right. And also the danger is, as ever with markets, they get ahead of themselves. And the thing about this is okay, so far, so very good, but it's still going to take really getting into certainly the first quarter of next year, or even spring, before you start to see a significant impact of this vaccine on the global COVID numbers. The fourth quarter in Europe, so I can say from my side, the fourth quarter Europe is going to look horrible. We've got these lockdowns everywhere, which we're hoping are going to work. But as you said, going into these lockdowns, the numbers were going up. They're at record highs. And at the moment, they're just about showing signs of peaking, but they're peaking at really high numbers. So it really is a case that the people are desperate for this vaccine to work, because otherwise, what do? Do we have a lockdown right through Christmas and into New Year? In which case, the last person to leave the global economy kindly turn the lights out. So, okay, on that happy note then, let's end it for this week. On behalf of Mark and myself, thanks as always for listening. Don't forget to keep up to date with all the market moving data and events in Econoday's global economic calendar. Stay safe, and we'll see you next time. Bye for now.